Joining us, Michael Saylor, MicroStrategy Executive Chairman. You never stop adding to the position of your company, and you have a lot of courage because there's been a lot of major swings in the past. And there were times when I was worried. Can you tell me, were you ever close to margin calls? Anything ever happening to MicroStrategy?
Well, when Silvergate Bank failed, we had to redeem that, but it turned out to be a benefit for us. We made a lot of money on that redemption. We repaid our Silvergate loan. But it's been a great journey. Since August 10th of 2020, MicroStrategy's bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P's up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Does MicroStrategy now do anything else?
We still run the software business, and it's generally a cash cow for us. But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity, and they trade the options. And so we have a very big, deep, rich options market. We've got high-performance equity, and then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral.
Here we have the current stock market update for MicroStrategy Incorporated, stock ticker MSTR. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So here, what we're going to be doing with this price chart is take a very long-term view. I don't look at MicroStrategy very often. There are some specific reasons for that, and I will cover those briefly. But since I don't cover this very often, I do want to take a very broad step back here and take a look at the bigger picture. So what we have in this price chart here is a weekly chart. So in this chart, we're going to be looking at some longer-term price levels that can possibly be used for traders to develop some profitable trading strategies for this stock going forward. So I'll start by saying that I'm not typically a fan of this company, and there are some reasons for that specifically. This isn't even necessarily being a bearish sentiment in the cryptocurrency space as a whole. Necessarily. I just think that MicroStrategy is typically used as a vehicle for buying cryptocurrency without buying the cryptocurrency directly. I don't really agree with that myself. I don't agree that they are much of a software company. In this interview, Michael Saylor does sort of say that the software business is a cash cow. I don't really believe that personally. I think the focus clearly is on cryptocurrency almost exclusively, and that the software business that they have is really sort of an afterthought at this point. I don't really see them as a software business. Gaining exposure to cryptocurrency through MicroStrategy tends to be much more expensive than simply buying the cryptocurrency directly. So buying Bitcoin on its own tends to be much cheaper than buying it through exposure that you would gain through using MicroStrategy shares. Obviously, these share prices are quite volatile. Cryptocurrency is quite volatile, and the MicroStrategy stock is also quite volatile. So these prices can change quite often. So these numbers are not constant. But typically, you'll see Bitcoin exposure that's almost double the price. So in other words, you might pay to gain exposure to one Bitcoin through MicroStrategy shares. You might pay something like 1.9x. So essentially, to gain exposure to one Bitcoin, you'd be paying 1.9x the value of Bitcoin to gain exposure to that asset through MicroStrategy. So that would really be the main reason. I mean, in addition to the fact that I don't really believe that the software business is much of a business at this point, or is much of Michael Saylor's focus. It's more than that. It's the fact that Bitcoin exposure tends to be much more expensive going through MicroStrategy. So in other words, what I'm really saying is if you're bullish on cryptocurrency, just buy the Bitcoin on its own. In my view, I don't think there's any reason to go through MicroStrategy. But looking at this price chart here, we will identify some important price levels because this is actually a fairly interesting price chart. There are some very interesting alignments that show up here. So even from just a technical analysis perspective, this is actually a fairly interesting price chart. So this is a weekly chart. I don't know if I said that, but each candle on this price chart represents a 1 week trading period. So what we have here is essentially a fairly volatile price movement that began toward the beginning of this year, roughly January 22nd. So here we start to see share price lows coming in at $43.87, and then from there we see share prices in MicroStrategy explode higher, reaching levels around 200 per share. So this is a very extreme price movement in a very short period of time. Essentially, this is the price movement that we're going to be looking at here in this Fibonacci analysis study that I'll be doing here. So as we can see, there has been some very volatile price movement within these upper regions of this latest trend. So for the most part, we're really seeing a trading range that comes in something like this. So right around 102.40 to the downside would be a recent price low, and then sort of a weak double top, not exactly a double top formation, but we can say that roughly 200 on the top side would be the range top, and then roughly 102.40 on the bottom would be the range bottom. So we are starting to develop sort of a range. As you can see, share prices tend to fall and then rally a bit, and then fall again, and then sort of bounce around in this trading range. So something like this. So it's fairly volatile, which makes sense. I mean, it's heavily exposed to cryptocurrency, and cryptocurrency is obviously very volatile as well. But what's interesting here is the fact that most of this bouncing activity that we have seen here does come at a very key Fibonacci support level. So if we're looking at this price movement here, this price movement that I have outlined, so roughly $200 per share to just below, I should say, $44 per share. It would be this price movement here. The length of the price movement would look like this. So if we're looking at this distance for the price movement, we can see that on two separate occasions, share prices have bounced quite strongly off of this 61.8% Fibonacci retracement, which comes in right around 103. It's right around 103.50. And then the ultimate price low here is 102.40. So we're talking about just over $1 for a stock that is extremely volatile. So to get within that close a distance between the technical support level and the actual support level is extreme accuracy. That is a high level of accuracy. So it's quite interesting here because we do now have a double bottom support zone coming into this stock right at this 61.8% Fibonacci retracement. But this extends a bit further, really, because we can even look at these prior price highs. If we're using the candle top as the prior price high, that should have been a line, not an arrow. But here we can see that this area here, the prior top for the top of the candle body that was posted during the roughly middle of February 2021 also comes right in line roughly with this same region. So this is a very important region of support that would be seen for this stock. So right around 105 roughly. I mean, it's not because these price levels aren't exact here, but this comes in at roughly 108.60, which would be the top of the candle body, not the candle wick here. We did see a bit of a spike high going into 131.50. But what's interesting here is the fact that this coincides so closely with these were the prior highs, and now here are the recent lows coming in right around the same figure. So it's vaguely around this $105 mark. So I do think that this is a fairly critical line in the sand. You could probably consider the stock to be bullish above 105 and then bearish once it falls below roughly 105. Although the main area of support that I would be watching here would come in right around this 102.40, 103.50 area at the moment, because I do think it's moved down a bit here. But there is an interesting confluence here between these two price levels. As we can see here, going back in time, this would be the beginning of 2021, and now we're looking at roughly the same price level here toward the middle of 2024. So there's a long distance here between these two spaces of time. and this price zone overall has been critically important for the stock. And then in addition to that, it is found at the 61.8% Fibonacci retracement of this major trending move higher. So overall, I do think that this creates a fairly strong line in the sand. Anything above roughly 105, you would consider the stock to be bullish. Anything below 105, or I would really call it 102.40 at this point, would consider to be bearish.
Has anything changed in terms of, you think, the investor class that's investing in your stock versus now investing, for example, in an ETF? Obviously, one is more levered than the other.
Yeah, if you're investing in the ETF, you're getting one-for-one performance, paying 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent,
right, buy
Bitcoin with it, hold it for 7 years, you can't do that as an individual, but MicroStrategy can do it.
What have you made right now? I think I just saw a headline that $1.2 billion in outflows took place out of the Bitcoin ETF. And I'm curious sort of what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing, and it's created more demand. But you got to keep in mind that Bitcoin is smart, fast, strong money. So on a Saturday night, if you're worried about a missile strike, you can't teleport your $10 million apartment to Singapore, lever it up 10 to 1, and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs.
Can you explain this?
That's okay.
Can you explain this? You know, one of the things you just talked about, if there was a missile strike or something, there was a sense that people talked about this as digital gold. And maybe you still think that's the case, but it often doesn't act like digital gold in the midst of a missile strike.
Yeah, it's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
Isn't it supposed to be the opposite?
Over the long term, it's up 44% a year every year, and you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities.
Our High Value Trading Strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.